Hi, everyone. Welcome to Forbes Talks. I'm here with Michael Del Castillo, the Michael Del Castillo, senior editor, all things Bitcoin, crypto. What up?
Hey, how's it going?
Hey, how are you?
It
Yesterday
like
was a big anniversary.
Yesterday was a big anniversary, and we celebrated it in typical crypto fashion. January 3rd was the 14th anniversary of the birth of Bitcoin.
Hallelujah.
It's usually very widely celebrated and recognized in the crypto world. There was hardly a peep about it yesterday.
Perhaps not a good year for Bitcoin.
Well, yeah, definitely not a good year for Bitcoin, but we've had many not good years for Bitcoin in the past. I think what was different yesterday was that the news was so big and so overwhelming again that this usually monumental, glass half full moment was passed over almost unrecognized.
Now, are you talking about SBF, Sam Bankman-Fried, being in court, or are you talking about this letter about Barry
all
Silbert?
of the above. Are we talking about Sam Bankman-Fried being in court? Are we talking about Cameron Winklevoss issuing a public letter to one of the most influential people in crypto? Are we talking about the big note from two giant regulators? All of the above.
Well, so let's unpack this a bit. I suppose we could get Sam Bankman-Fried out of the way pretty quickly because he said he's not guilty, so we can move on. This is in some ways the gift that keeps on giving, but is there anything more to say at this point, or let history take its?
Yeah, no. I think it was really important and good for the crypto industry that Sam Bankman-Fried pled not guilty. Not because I think he isn't guilty or is guilty, but because it means that we're going to have the chance for discovery. That means we're going to have an opportunity to see this play out in court.
And unpack what really happened.
And I think perhaps even more importantly than just figuring out was one man guilty, and will perhaps maybe the people that were harmed be made whole. But we're going to get to see one of the original promises of Bitcoin's underlying technology, blockchain, play out in a court of law. What I mean by that is we have been told from the very, very early days that if the traditional financial system operated on a public blockchain or in a similar manner using distributed ledger technology or another similar technology, the next time... You
sound like a prescription drug commercial right there.
Hey!
No,
yeah, I may be too used to saying all that too quickly.
Distributed ledger technology.
There's more than just Bitcoin, and I think that in a lot of ways we're going to get to see a lot of that not really put on trial, so to speak, but proved. We were told that when the next Great Recession happened, we would be able to tell who was to be held accountable more quickly because it would be on a public blockchain. There would be a record.
As opposed to the banks the last time, basically?
Yeah. Like, I mean, when a bank makes a bad loan to another bank, which makes a bad loan to another bank, which makes a bad loan to another bank, not only are you seeing the actual value out there being ballooned compared to the underlying assets, but it takes weeks and months to go through that auditing process. You have to go into a centralized database, look at their accounting files. You have to then go back and retrace that stuff and go again and again. And some of the guilty parties during the Great Recession were never held accountable. In fact, almost nobody served any prison time. We were promised that if there had been a blockchain component, that would have happened quicker, and more people would have been held accountable.
This time will be different.
And I think we are seeing the Bitcoin and crypto equivalent of the Great Recession right now. We are seeing very similar practices being that triggered the collapse. And Sam Bankman-Fried and FTX being such a crucial central
party.
See the
Lehman Brothers and all this? Actually, no, because we're talking, nobody went to prison. I have to, that collapse, Dick Fold was not, a criminal in
There
court.
has historically been a disconnect between the punishments that have been doled out by U.S. courts to traditional bankers and the punishments that are being doled out to crypto folks for very similar crimes and alleged crimes.
Is it because of the Wild West mentality that people have around crypto?
Well, it depends on how you look at it. You know, if you wanted to be skeptical, you could say it was because the powers that be want to make sure that they're holding on to the control that they have, and they see the banks as their babies, and they see crypto as the competitors. You know, if you wanted to be a little more glass half full about it, the banking infrastructure is centuries old. The processes are very hardwired. It's very difficult to change. Crypto being so new means that they have more of an opportunity to influence. So there's a lot of punishments that I think have been doled out as warnings.
Yeah.
You know, if we can scare enough people with these punishments early, you know, we can maybe discourage it in a way that is more difficult to do in the banking world.
Before we get to this very high drama battle, you know, with the Winklevoss against, you know, you mentioned legend or whatever Barry Silbert might be, I do want to talk about the fact that, to your point, it was the Fed, I believe the FDIC and the OCC all came out with this statement also warning banks, essentially it's dangerous to hold crypto. I mean, it seemed a little belated, a little bit odd. What do you make of it?
It's posturing. They did it because they had to.
We told you so?
Yeah, no, because they already did tell so.
Right.
Pretty much every regulator in the United States, most regulators in the world, has issued those warnings. They did it years ago, and they've done it repeatedly.
So it's just the latest.
Some regulators have done it once. Some regulators have done it multiple times. I think that maybe the biggest difference there was the seeming coordination. I think that's perhaps a little bit of a change from past warnings. But the content of the warning was very similar to past warnings about crypto being a risky asset. I think the timing... It's mostly just to give the appearance of doing something. They should have been doing something a lot sooner than that, honestly. The fact that FTX, that they had so little insight into FTX in spite of seeming cooperation from Sam Bankman-Fried.
Investors had so little insight into SBF.
They should not have been caught off guard.
Yeah.
There should have been no caught off guard here.
Right.
And the fact that this central organization dealing with assets that have been variously described as commodities and securities seemingly was so opaque to regulators makes those regulators look bad.
So now they're standing firm and reminding us, lest you think it's a good time to buy, caveat emptor sort of.
They seem to be very willing to let the problems play out and deal with them on a case-by-case basis. There's been a call for new regulation for years, and those regulators refuse to do it. We don't need new regulation, they say. You know, we have a very clear definition of a security. We have a very clear definition of a commodity. It's up to you guys to figure out where you fit in there, and if you screw up, we're going to come get you.
Right.
And so we've seen what that looks like now. We've seen billions of dollars seemingly disappear. We've seen hundreds of thousands, maybe millions of people be harmed, and they don't look good. The regulators don't look good by waiting until such a giant catastrophe happened to act.
Right.
Now, the fact that these three regulators, I think, are speaking in some coordination is important. It shows a change of tone, it's a change of pitch, I should say, that they're sort of elevating it a bit. And I do believe that it might mark the beginning of some actual change.
Which has been threatened for some time, right? I mean, it's something that everybody's been looking for.
Been asking for.
Yeah.
So it's not new in any sort of like meaningful revolutionary way. It's more of just a progression of what's been happening for a long time, and I think the timing says more about them kind of looking to save face than anything else.
So talk about this Winklevoss v. Silbert. I'm looking at a letter here on Twitter.
Yep.
What is going on?
So I want to take a half step backwards
Yes,
on that
please.
because I think the context there is actually really interesting. So yesterday was January 3rd, the 14th anniversary of the Genesis, the Bitcoin Genesis block.
Yeah.
When Satoshi Nakamoto, whoever he, she, or they were,
Remarkably still anonymous.
remarkably still anonymous, though there are some more likely candidates than others, hit that enter button on his, her, or they computer and started the Bitcoin blockchain. They embedded a message in the code of that Genesis block. Sort of like if you think of when a hostage taker asks their hostage to hold a newspaper in front of a photo to prove the date, right? Satoshi Nakamoto embedded a headline into the Bitcoin Genesis block, which is Chancellor on the brink of second bailout. There's very little additional.
What does that mean?
So,
that's very cryptic.
Yeah, so Chancellor on the brink of second bailout. First of all, you have to ask, what was the bailout, right?
Yeah.
These were banks, UK banks, but happened all around the world.
14 years ago, so of course we're talking
during
about
the Great Recession.
The Great Recession, yeah.
These banks behaving irresponsibly, lending money that they had borrowed from other people, lending other people's money that they had put into bank accounts. It's called rehypothecating.
Rolling up subprime debt into
subprime debt,
AAA rated
hiding
securities.
it a little bit, making it look like everybody had more money than they did.
So this is a
obscuring
cautionary.
the quality.
He or she or they were basically saying, "Be warned, this could happen again."
I think it was more a warning against. Well, to a degree, yeah, but there's a second component there, which is the chancellor. The chancellor doing the bailouts, right? So these banks behaved irresponsibly. The government got involved. Essentially, and it's an oversimplification, the system was at risk.
Right.
And they printed a bunch of money out and basically gave it to these banks. It's an oversimplification, but that's essentially what happened to sort of keep them afloat. They were considered systemically important. If the banks went out, retail economies would collapse. Mom and pops would be harmed. The ripple effects would be unimaginable. So the story goes. And instead of letting that happen and letting the banks learn those lessons, the government bailed them out. Many people, many early Bitcoin adopters resonated with that warning and got involved to create sort of an antidote. They saw Bitcoin and its reliance on mathematics instead of government control for its value as an opportunity to build something new. Sadly,
no government equals no chancellor equals no backing when things go wrong.
Exactly. And sadly, what we saw on the 14th anniversary of the creation of that Genesis block with that warning embedded in it was an echo almost of what had happened, except now it was happening in Bitcoin itself. Not Bitcoin, just Bitcoin. It was the way that people were treating Bitcoin.
So it's these behemoths in the space, basically.
These behemoths in the
acting
space.
Acting much like the CEO of a bank?
Yes.
Okay.
Yeah. I think that there's no doubt that the Gemini Earn product that Tyler and Cameron Winklevoss created, which essentially
These are the guys who got rich off Facebook, just to remind anyone who's not seen the social network.
They got $60 million or so from Facebook, cleverly invested in it, letting some of it ride on Facebook, letting some of it go into Bitcoin. They became early Bitcoin bulls, made a whole bunch of money, are often described as the first Bitcoin billionaires. But they had a company to run. They had to make money. You can't just hold Bitcoin and hope that its price goes up and count that as revenue. So they created a bunch of products. And one of those products was an Earn product that made them look an awful lot like a bank. And it was relying on some pretty complicated, seemingly convoluted processes that involved a couple of companies that are owned by digital currency group Barry Silbert's company.
Right. And this is the guy who started Second Market, which allowed those Facebook employees to trade their shares prior to it being public. And he basically wanted to be the Warren Buffett of crypto.
Barry made his name improving traditional finance. He made it easier for companies that hadn't gone public to trade their stocks, for those employees to trade their stocks. And he sold Second Market, made a pretty penny, developed a great reputation, and he reinvested a lot of that money to become sort of, as you put it, the Warren Buffett of Bitcoin.
Or blockchain, maybe more. I guess Bitcoin.
Yeah, okay. He started off just Bitcoin. His subsidiary, Grayscale, has created some trust products for many cryptocurrencies, somewhat controversially, though the vast majority of their market value is focused on the Bitcoin trust.
So what's the accusation? What is... They're not happy with each other.
They're not happy. It's a really ugly sort of he said, she said, or he said conversation. So it's kind of hard to tell for sure what actually happened. But Gemini had loaned some money to the digital currency group, and
which in itself seems weird. Doesn't it?
Well, no, I'm oversimplifying this. No, right. I'm way oversimplifying it. And
for me and the people at home. Thank you for that.
It's not a direct loan. There's a promissory note involved, and it's kind of standard operating procedure to a degree. And the interest that was paid to these to the Gemini customers, along with many other customers, came from sort of an arbitrage opportunity that existed behind the scenes at some of Barry's subsidiaries, seemingly all above board until the dynamic changed.
So you've compared this to what happened back in 2009. In what respect is it similar?
So one of Digital Currency Group subsidiaries, Genesis, not Gemini, I always get those confused. Genesis was basically lending billions of dollars, and by at least one measure, $100 billion over the course of a single year to a bunch of other companies that were all playing this arbitrage game. There's if you bought if you borrowed money from Genesis and then use that money to buy Bitcoin securities from Grayscale, another Barry Silbert company, you could that money would be locked up for 6 months. I'm sorry, those securities would be locked up for 6 months, and because they were trading at a discount, when they matured and you sold them, you could pocket upwards of 20%. If you gave,
assuming the trajectory continued, right?
Yeah, and you could give 6% of that to your customers, and that's exactly what a lot of these companies were doing, and you could keep the rest. It was a nice way for everybody to make money. But there's some debate about what the initial trigger was. There was a trigger, roughly February of this year. Roughly February of 2022. It's now 2023. That sort of started to change that equation. But because there is a 6-month lockup period, there was...
so when things started to turn...
They couldn't do anything.
Right. Them's the breaks, no?
Yeah. And the...
So Silbert's in the right here, or is it hard? You don't want to be the arbiter of...
I think, no, I'm not going to say anyone is right or wrong, but I will say that a lot of people were expecting things to continue that were obviously going to change. And without a doubt, more conservative business practices would have minimized harm.
I mean, here's the analogy I see with the banking industry, because much like a lot of what happened on Wall Street, when the wind's at your back and things are going well, you're a genius. But when conditions change it's the conditions. You externalize it. It's not your fault. So basically, it sounds to me like a lot of people who were standing to lose money and they were trying to cut their losses as much as possible, and somebody wouldn't let them. Is that fair? Is that too simplistic? Yes,
it's
Diane.
fair and it's too simplistic.
And it's too simplistic. so like this is an ongoing story. What does it say right now, and what should we be watching as this unfolds?
What I think is the poignancy of that moment, January 3rd, being the day that Cameron Winklevoss, after seemingly months of what he characterizes as good faith efforts to sit down with Barry Silbert and find out some sort of a way where his customers could get their entitled rewards for this investment while not bankrupting anybody else. Cameron left published a public letter to Barry Silbert, basically airing all the dirty laundry. In a lot of ways, confirming some suspicions that people had had previously. In other ways, opening new doors for
suspicions such as what?
The role that the way that these companies were intertwined. The way that these companies were intertwined, and the possible ripple effects of that. And what we didn't get into, and we shouldn't get into, there's much more detailed descriptions online, and you can read them on Forbes Digital Assets, the Forbes website. But basically, the money that was borrowed from Genesis was used to buy securities from Grayscale. And when it started to become apparent that those securities weren't going to mature at a profitable margin for the borrowers, they used those soon-to-be underwater securities as collateral to borrow more money. And those loans, in some cases, seemingly were turned into other loans.
So is it a misrepresentation to some extent, knowing what's coming?
I think that what was going to be the domino that fell, and again, we don't know for sure what the actual genesis was. It was February, March, April of 2022. Probably multiple things happened that triggered some pretty high-profile failures, that triggered other pretty high-profile failures, that triggered other pretty high-profile failures, that eventually brought FTX into it, and that now have seemingly embroiled Barry Silbert, Digital Currency Group, Genesis, Grayscale, and Gemini as one high-profile example, but many other companies that did similar practices. This all amounts to something that looks an awful lot like what happened in the lead-up to the Great Recession. So, you
and that they were all guilty of doing similar behavior.
Yeah, lending money.
Groupthink.
Yeah, and lending money that they had borrowed from people that had borrowed it, and creating a sort of Russian doll domino effect, whatever you want to call it.
But there's nobody there to rescue. I mean, and then you've got this poignant note you mentioned, which is basically in some ways saying, we're not going to jump. There's going to be no big meeting in Washington and a rescue plan.
So here's the interesting part, because now if we're going to go back to that message in the Bitcoin Genesis blog, Chancellor on the brink of second bailout. So who is the chancellor in this instance, right? Barry had said previously that he wanted to be the Warren Buffett of crypto. You could almost argue that if he had succeeded, that he might have been the person to do the bailing out.
The Hank Paulson of crypto.
Yeah.
Right.
But he's in fact embroiled in the problem, right? So there are credible reports that there are multiple conversations going on with some Bitcoin bulls and maybe some people loyal to the CEOs of these companies that maybe are a little skeptical but might come off the sideline to help a friend out. There remains an opportunity for a bailout here, what amounts to a bailout. but not a bailout from the government, a bailout from the private sector, a bailout from other companies, a bailout from maybe the friends of these CEOs.
The companies that still have the assets to bail out. And of course, we're going to be, we'll be talking about this, I'm sure, week to week. It's not like this is, everything you need to know. But as of this point right now, what would you be watching for? Because we've got this messy battle being played out. Is there some general sense, let's take the bulls and the bears in this category? I would assume the bears are probably have a stronger case right now. Too strong. Again,
well, okay,
I'm
so
sitting here.
There's a lot of bears. There's a lot of different gradations of bears, right? I think the bulls are pretty simple to summarize. They're hodling, HODL, the Bitcoin term for holding. That's kind of how you express being a bull in the very simplest terminology. Now, there's obviously degrees of that as well, and I do think that they may be coming off the sidelines with some old-fashioned U.S. dollars to give a little cash infusion here. That's a big maybe. The bears, on the other hand, there's the passive bear, which sold their assets months ago probably, and will never touch crypto again. And then there's the active bears, the shorters. And I think we talked about some of those shorters the last time that we had a chance to get together. And these are people that are actively betting against it. And what should we be watching for, though? I really do think that it's going to come from an unexpected source. I think there will be a bailout. And by bailout, I mean private money from a private individual or institution.
But not making people whole. What does whole look like?
What would whole look like? It would be paying the interest that was promised to the account holders. In Cameron's letter to Barry, he mentioned 340,000 account holders that they basically owed interest to. And he's claiming that they can't pay that interest because Barry and his companies are kind of sitting on the sideline, or as Cameron put it, in his ivory tower, hoping it's all going to blow over. I think in at least one instance, when looking at the specific conversation about Gemini, Genesis, Grayscale, and Digital Currency Group, making whole would be to pay the interest that is owed to these account holders.
And no response from Silbert as of yet.
Oh, yes, immediately.
Okay. All right. So let's get his point of view as we sum up here. Because we've heard from what Cameron Winklevoss has said. What's been Silbert's response?
So Barry responded immediately, saying that they had in fact responded to a proposal that would have amounted to them getting in the room together a couple of days after Cameron's last account. Cameron did not mention that response. Whether by oversight or intention remains to be seen. We don't even know for sure that there was a response. We kind of have to take Barry's word for it that there was a response. He also says that they haven't missed a single payment and that the next one isn't due until this May. If that were to be the case, that would imply some mismanagement on Gemini's side. If that's not the case, then there's some obfuscation there on Barry's behalf. But what I do think is really interesting is that they all stand to be harmed almost equally if this collapses. The seeming unwillingness to get together in a room as was proposed and instead have this conversation on Twitter indicates something that is not right. I don't know what that is.
It's interesting, and of course we invite people to continue tuning in. We'll continue this conversation, but I do think that moment of getting people in the room and minimizing the losses to one particular company in that case was transformative in retrospect. And so it'll be interesting to see if that opportunity exists. At the moment, it doesn't seem so.
Yeah, it's if I could just put one sort of bookend on that comment there, I think that I indicated that everybody would be harmed equally. What I mean by that is everybody stands to lose their company, right?
Yeah.
Like bankruptcy would remove somebody's pride and joy from their life, maybe forever. What it means to the industry is not equal. If Digital Currency Group were to eventually go bankrupt, it would be the collapse of one of the 2 or 3 largest institutions in crypto right now. Likely up there, I would throw Tether in there, Binance probably, maybe one more. But if Digital Currency Group were to go bankrupt, it would mean a catastrophic moment for one of the biggest institutions in crypto. If Gemini were to go bankrupt, or some of the other companies that we've seen sort of suffer collateral damage as a result of these other dominoes falling, it would, of course, be incredibly harmful to Tyler and Cameron's years of work, and to the maybe to the account holders there, but it would not have the same impact on the industry itself.
Systemic risk.
Always
a danger, and what a way to kick off 2023. Thanks,
there
Michael.
are alternatives out there. I'm
There-
so sorry.
yes,
I'm so sorry.
there are alternatives
There are
out there.
alternatives out there, and there is a movement emerging from this for people to custody their own keys, to take their assets off of third parties, and to do it the old-fashioned way. I think maybe a little bit more aligned with what Satoshi had in mind when he put that warning in the Genesis blog.
Who is Chancellor? We shall discover. Thank you.
Thank you.